Hello my dear students, this is Praveen Bansal, your accounts coach, teaching class 11th accountancy chapter number 7, depreciation. Students, we are going to cover theoretical part of this chapter today, that is provisions and reserve. We will understand what is provision, what is reserve and the difference between the two. Let us start. Firstly, we will study what is provision. Before making you learn provision, I would like to recall one of the concept you studied earlier, prudence. Prudence means anticipate all the losses and expenses. Prudence means anticipate all the losses or expenses. That means if you feel like that there would be certain expenditure or loss in the nearby future, in the foreseeable future, then you must consider it today, and that is the concept of prudence is. On this concept only, we will study what provision is. Let us understand the definition of provision. There are certain expenses or losses which are related to the current accounting period, but amount of which is not known with certainty because they are not yet incurred. An accountant or the manager can anticipate that there would be some loss in the nearby future by his experience, by his past experience, and he can really see in the current period that this much would be the loss, but a certain amount is not known. That's why we are studying that how can we can get prepared for such kind of incidents which is going to be in the future. It is necessary to make provision for such items for ascertaining true profit. Students, you must focus, we are talking about the true profit. If we feel that there would be an expense and we are very sure about it, we must inform our users from our book of accounts for such kind of losses or expenses to give them a true and fair view, because our users use our books for making their decisions. So we must act very honest and loyal. Let's understand this thing by an example. A trader who sells on credit knows that some of the debtors of the current period would default and would not pay or would pay only partially. Suppose you are a trader, you are selling goods on credit from a very long period of time, and you know the behavior of consumer in the market. Few of them give you money on time, few of them make late, few of them do not pay at all, and few of them pay partially. So according to the past experience, the manager or the trader or the accountant can easily anticipate that this much is going to be a loss in the future. So we are following the concept of prudence. We must anticipate such kind of losses. We must consider them in the account. Let's see what your book says. It is necessary to take into account such an expected loss while calculating true and fair profit or loss according to the principle of prudence or conservatism. The other name for prudence is conservatism. Therefore, the trader creates a provision for doubtful debt. Students, when I feel that this much of debtors are doubtful, their money may not be recovered, so I make a provision for doubtful debt. Doubtful debt means we are doubting few people whether they will pay or not. So that is provision. Provision means anticipating a future loss or expense, but we do not know the exact amount. That's why we just make an idea of such kind of loss by our past experience and put it into our books. Provision for repairs is one more example for that. Though there are many examples given in a book: provision for depreciation, provision for bad and doubtful debt, for taxation, for discount, for repairs and renewals. So, these all are the examples for provisions, right? It must be noted that the amount of provision for expense and loss is a charge against revenue of the current period. Here you need to focus. The amount of provision is a charge against revenue of current period. Charge means a compulsory expense. The way you have to pay rent, because it's a charge, it's an expense. In the same way, if you can anticipate a loss, that means such loss or expense is going to be treated in the same way, the way you are treating your rent, salary, etc. So, it is going to be a charge on profit. Charge means a compulsory expense. Even if you are suffering with loss, it is going to be charged. Creation of provision ensures proper matching of revenue and expense, hence the calculation of true profit. That means provisions would be deducted from the revenue of the current period. Revenue of the current period means inflows of the current period. And when I talk about outflows like salary, rent, I am going to consider provision as an outflow only like other expenses. To get the true profits, I am going to deduct rent, salary and provisions. And this is how we get true profits. This is known as provision. It is a charge on profit. And here we have few examples as well. Clear, students? That is what provision is. As we know that rent is an expense, salary is an expense, and all expenses are transferred to profit and loss account at the end of the year. And the entry we make to transfer all these expenses to profit and loss account is P&L account debited to provision for bad and doubtful debt. The way I said, provision for bad and doubtful debt is an expense, and expenses are to be transferred to profit and loss account. In the same way, we are going to transfer provision for bad and doubtful debt to P&L account, and this is going to be an entry. Let us understand this thing through an example. We have sundry debtors of rupees 68,000 in our books. 68,000. Clear? The additional information is they are bad debts. 8,000. That means out of 68,000 rupees debtors, 8,000 are not going to give a single penny. 8,000 are not going to give you a single penny. That means debtors are 68,000 minus 8,000, 60,000. 68,000 minus 8,000, 60,000. Isn't it? The way a machine gets depreciated, in the same way these debtors are getting reduced. 8,000 are reduced. But after facing such incident, the manager thinks he must be very conservative. He must anticipate such future losses. So, what did he anticipate? He anticipated that there should be a minimum provision of 10% on the remaining debtors. Why? Because the investors must get an idea that this could be a possible loss, isn't it? 10% could be a possible loss in the future. He must make his mind before investing in our company. The government must know that we can face such loss in the future. So, just by considering the convention of true and fair view, we anticipate such thing. Let's draft journal entries for the given information. The first given information was rupees 8,000 debtors are gone, right? So, it is an expense to us and debtors are reduced. Let's see what journal entry is going to be in the books. Bad debt being an expense is debited and debtors are reduced. Debtors are reduced. Bad debt account is debited and debtors are reduced. So, this is the first journal entry for treating bad debts. Now, we have to transfer this expense to profit and loss account. Bad debt is 8,000 and this is my expense and all expenses are to be transferred to P&L account. P&L account debited to bad debt, right? This is the journal entry for transferring your expense naming bad debt to profit and loss account. And now we have one more adjustment, that we have to make a provision for 10% doubtful debts. And you know students, we have to make provisions at the end of the year because final accounts are delivered on 31st March and we have to transfer all the expenses to P&L on 31st March. See, bad debts are 8,000, debtors were 68. So, currently we have 60,000 rupees debtors and 10% provision is to be made, that is 6,000, and this 6,000 would be transferred directly to the profit and loss account because it is an expense. So, profit and loss account would be debited by 6,000 and provision for doubtful debt would be credited. The way we transferred bad debt to profit and loss account was debited and bad debt is credited. In the same way, I have transferred provision for bad and doubtful debt to P&L account. P&L account is debited and provision for doubtful debt is credited. Here, students, you must understand that debtors are asset, they are debited and provision is here credited. When the provision is credited, that means we have created a liability on those debtors that it could be a case that they would be proven bad. So, by putting provision on credit, if debtors are here, I have reduced these debtors because I have increased the weight on provision, right, and that too on credit side. This is how we provide for anticipated losses and expenses by the way of provision, just because of the conservatism thing. And this is what provision is, and it could be on taxation, on repairs, on renewals, etc. And provision is a charge on profit. Clear, students? Now, we will start understanding what is reserve. Reserve is part of the profit, may be set aside and retained in the business to provide for certain future needs like growth and expansion or to meet future contingencies such as workmen compensation. Students, it is a part of profit. Now, you must understand what is the difference between charge on profit and part of profit. Charge on profit means you have to apply that. You have to charge it. But part of profit means if there is a profit, there would be reserve. If there is no profit, there would be no reserve. Reserve is something, a piggy bank to you. If you have profits, then you will keep a bit of profit into a separate box so that you can use that money for some future purpose, like for growth, for expansion, or say for feeding some people. As the book says, workman compensation. That means you are maintaining a piggy bank for workmen. You are putting a bit of money into that piggy bank on regular intervals, just to be on safer side if any of my worker meets with an accident. Then we would have a separate reserve to treat him. That is reserve. But just think of one thing. If we wouldn't have any profit, then how would we keep money in that piggy bank for such workers? So reserve means part of profit. But yes, there would be different reserves for different purposes. So let's understand what kind of reserves do we have in accounting. We have general reserve, we have workmen compensation fund, we have investment fluctuation fund, we have capital reserves. All these reserves have different purposes. So let's understand the difference between reserves and provisions. The first difference is nature. Provision is a charge against profit, as we have discussed, whereas reserve is an appropriation to profit. That means profit appropriation, division of profit appropriately. How much for the workman, how much for the owner, how much for the growth of business, that is appropriation. But provision is simply a charge, like a rent, like a salary. Purpose. Provision is made for a known liability to current accounting period. Provision means if you know that certain liability will for sure occur, you are making it an expense for the current period. That is provision. And reserve is, on the other hand, for strengthening the financial position of the business, putting money aside for the future. That is reserve. Then we have the third difference, presentation in the balance sheet. Provision is shown either by way of deduction from the item on the asset side. For example, debtors are 68,000 and you feel like that 6,000 would be the future doubtful debt. You would be showing debtors like this. 68 minus 6. This is provision. But when it comes to reserves, reserves are shown on the liability side. Reserve is nothing but a profit. So it must be shown with the capital on the liability side. Then effect on taxable profit. Provision is deducted before calculating taxable profit. As we have discussed that provision is a charge, so it must be deducted, then taxes are to be calculated, right? But what about reserves? Reserve is created from profit after tax. Reserve is an appropriation to profit. So those appropriations must be made after keeping all the taxes away. That means you have to pay the taxes, whatever is the disposable thing to you. You have to keep your different piggy banks according to that. Then we have element of compulsion. As we have discussed, provision is a charge. The provision is compulsory, but reserve is a part of profit. That is conditional. If there would be a profit, there would be a reserve. Otherwise, no. Provision is necessary to ascertain true profit. So, here is a compliance prudence. So, it has to be made even if there are no profit, compulsory. And reserves cannot be created unless there are profits. And the last difference is use for the payment of dividend. Provision cannot be used for distribution as dividend because provision is a future anticipation for the loss. it's a charge. So how can you use that thing as dividend? But general reserve can be used for dividend distribution. So these are the differences between provision and reserves. And if I recall, the types of reserves, like general reserve is general, it can be used for any purpose according to the managers, but these are the reserves like workmen compensation fund and investment fluctuation fund, specific one, that the money in these funds would be used just for workmen or just for the fluctuation in the investment. And here we have capital reserve. These reserves are made out of capital profits. What are these capital profits? Capital profit means capital gains. Capital gains means gain arising out of non-core activities of business. That means selling land on profit. This is not the core activity of business. When you sell land and you get a capital gain, so it cannot be treated as a regular profit thing to the business. It is a capital gain. So such gains are transferred to a specific reserve, which is capital reserve, and there would be certain restrictions. There would be certain restrictions for the usage of such reserve. And these reserves, general reserve, workmen compensation fund, investment fluctuation fund, these are created out of revenue profit of business. That means recurring profits. So students, this is all for the theoretical part of provisions and reserves from the chapter depreciation. So you all are advised to do all the questions provided in your textbook for this theoretical portion. So that is it from my side. Thank you. Take care.